Good morning, traders. In today's video, we are going to talk about the fair value gap, how to identify the fair value gap. So first of all, you wanted to go into a bigger time frame because the bigger time frame fair value gap most likely to be respected more than the smaller time frame. So we will go to 15 minute, and in 15 minute you have to identify a fair value gap. For example, first thing we start with this one. So it's it's the three candles. So if you see the first candle, the second candle, and then the third candle. So the gap between the first and then the third candle is the fair value gap. And how we draw it, you can choose the tool here. So we go from here to here and we extend it. Okay, now we can mark it as a 15 minutes fair value gap. Okay, then again we have another one here. So one, two, three candles. Okay, same thing, 15 minutes FVG. Now this fair value gap has been tested many times. It's still valid if the candle comes down, and then if you see the wick in the fair value gap, this fair value gap is still valid. If the candle closed below the fair value gap or above the fair value gap, then the fair value gap is no longer valid. So now we identify two, and then there's one more here. So same thing, one, two, and three candles, and between the first and the third candle we draw a fair value gap. Okay, 15 minutes FVG. Okay, now once you identify the fair value gaps in a bigger time frame, then you can start going for a smaller time frame. So now we came down to 10 minute. Then in 10 minute we see another fair value gap, which is here. So okay, now this is 10 minutes. And you can change the color when you identify the fair value gap. So for 10 minutes we can give a different color. We also have one more here. So for the 5 minute and 15 minute, 15 minute will cover the 5 minute, sorry, the 10 minute also. So if you see there's one more, but these two fair value gaps in 10 minute, it's under the 15 minute. So we know that the market will make us support here, find a support here. So we can delete this one and we can stick with the 15-minute one. Now we go down to 5 minute. Same thing here. Here we have two fair value gaps, and they're also under the 15 minute. So we don't have to draw anymore. Okay, now when the market comes down to this here, most likely it is going to test this and then go back up. If it breaks this, then the next level is going to be here. If it breaks this, then we have this level. So that's how you draw the fair value gaps. Normally what I do is with the fair value gaps, I use quick pips for the trend. So now this quick pips is showing me the trend. We are in uptrend. In the uptrend, I would not look for the sell entry. I will always look for the buy entry. So now I will wait. As you see, it went up, tested yesterday high, make a wick, and then now this candle is closing bearish. Now we are in a New York session. Okay, now when the market comes down to this level, test the fair value gap and give closing above the fair value gap, I will be looking for a buy entry. and with that buy entry, I will be targeting yesterday high as a take profit. So this is pretty easy to identify the fair value gaps. Again, you just have to practice a little bit. You have to train your eyes, but it's easy. Uh, just identify three candles, and between the first and the third candle, whatever the gap is, that's your fair value gap. So you can also go down to like 1 minute and find fair value gaps in 1 minute. But normally I try to stick with the 5, 10, or 15 minutes because those gaps are more likely to be tested and get respected by the market more. I hope this video helps. If you have any question, feel free to leave them in the comments and then I will answer them.